Hello everyone, myself Vaibhav. I'm your host for the daily talk in which we are going to consider the beverage giant PepsiCo's quarterly earnings. In yesterday's session, we had looked into the prospects of the Coca-Cola. Now it's another day, another session for equally well-known beverage company. PepsiCo, it also has a presence across the world, and no matter to which country and which continent you go, you are pretty much likely to find the PepsiCo's products even in the remotest corner of that country and continent. Such is the presence of the PepsiCo in the lives of the people across the world. Sometime or the other, most of the people have tried its products and have been fan of the various drinks and other options provided by the company. For last couple of years, the company is also trying to break into the healthy snacks category. The people have been getting more and more conscious regarding their health and the choices they make for the food, and the company has been trying to tap into that market segments as well, along with its presence in the traditional segment of drinks and chips. So we will dwell into the company's quarterly earnings highlight and see what is in the store for us, and afterwards we will also take a look on the company's share price performance over last couple of days, couple of quarters, and couple of years as well for different time horizons, starting from the short term to the very long term. This is the quarterly earnings report for the third, sorry, not third, the fourth quarter, that is the quarter ending December 30th, 2023. Here, if you consider the company's performance, the net revenue were slightly on the lower side, just little bit lower of 0.5 percentage. And if we look at the EPS, the earning per share was on the higher side. So there has been growth in the EPS for the quarter, and for the full year as well. It has risen just a little bit, 2 percentage point. So even in this constant revenue environment, the company has been able to grow its net income purely by improving its profit margin. Now we look at its consolidated statement of income to see where the company is minting money and where it is spending all those money on. There is the PepsiCo Inc.'s and subsidiaries consolidated statement of income. You can see that in the last quarter, that is the quarter ended 30 December 2023, the company was able to grow its net income substantially from little over $500 million to $1.3 billion. This is a huge growth, but this is only explained by fluctuations which keep happening from quarter to quarter. There has not been much of an increase in the annual profit, so that explains away the seasonality of quarterly earnings. If we look at the full year revenues and the net income, the revenues have grown, and also along with that growth in the revenue, the net income has also grown, but only slightly, 2 percentage point it is higher. And if we consider the operating margin has improved for the company. So even if we look at the revenues, which are pretty much stagnant for the quarter, the company was able to increase its profitability purely by reducing its expenses, and there has also been difference in the impairment charges on the intangible assets, so that has resulted in the better quarterly income for the last quarter compared to the fourth quarter of 2022. For the full year performance, the company hasn't really found any strong growth, neither on the revenue side nor on the net income side. The growth is there, but only slightly, and as a result of that, the company's business operation, you can say, have been more or less stagnant. The same theme was also visible for the another beverage giant, Coca-Cola. So PepsiCo is its main competitor, and it's not really doing much different. So this kind of explains the state of economic state of market for these both the companies, and I think for any growth to be on the higher side, either the companies will have to launch newer products which will appeal to the wider consumer base, or the company is market share has to change dramatically. And I think depending on how we look at it, given the company's history, this is a sticky segment. No single product catches on very fast, so this will become very difficult, and only on that assumption we can make a fairly good guess that the company's revenue is not likely to change much in quarterly terms. There might be some upward momentum in annual terms, but for the next quarter I'm not really that optimistic. Of course, you can always count on some revenue growth, slight revenue growth, and income growth purely from the growth which we see in the economy. So we can expect the low single digit growth in the revenue and net income, but not much impressive, nothing much impressive. Now coming to the supplemental financial information, the net revenue have been segmented into different segments, and all these information is available if you go deeper into this income statement, from where the company is bringing in money and from what part of the world. Everything is listed, and how much spending is there for those earnings. This is also available on this statement. Coming to the cash flow statement, how the company is generating cash and where it is spending. The net cash provided by the operating activity is significantly higher in the year ended 2023. This is on account of difference between the 2 years, and the main difference was there was loss associated with the juice transaction that had taken away almost 3.3 billion US dollars, and now as that charge is not there on the operating profit, this time around we have these net cash from the operations on the higher side. And if we adjust other items, you will see that there is not much of an difference for the company's business operations. So the total net cash provided by the PepsiCo's operations stand at $13.4 billion. And if we look at the investing activity, out of these money generated by the operating activity, the investing activity has taken away $5.5 billion, which is significantly higher compared to the 2.4 billion US dollars. This is because there is this adjustment of the proceeds associated with the juice transaction. So from the operating activity, it was deducted and added back to the investing activity. Now let us come to the financing activity. There has been significant reduction in the cash used in the financing activity. So that has freed up a lot of cash for the shareholders, and it is reflecting on the cash and cash equivalent holding of the company at the end of the year, which now is just little shy of US dollar 10 billion mark. To be precise, it is at US dollar 9.76 billion, and this is because the net increase in the cash and cash equivalent has been almost 100%, not exactly 100%, but 90% of its earlier cash hold, and that has resulted in almost doubling of the company's cash and cash equivalent holdings. So there is this significant improvement in the cash position of the company, and that frees up the hand of the PepsiCo to provide more cash and returns to its shareholder, either in the form of dividends or in the form of share buyback. And the company is indeed exercising that option with solid return of money to its shareholders. And as I had said in my assessment of the Coca Cola, the company has a stable business, and that thing applies to the PepsiCo's business operations as well. It is not really likely to see much fluctuations over the quarterly performance unless there is any significant development which has a favorable or adverse impact on the intangible assets like goodwill among the people. So, barring that kind of surprise, on most of the times we are likely to see the sales remaining on the similar ground because it has sticky business operations and there is not much of an impact of any single market force in its revenue. Now we will dwell on the technical side of the story. So we now head to the JForex 4 platform. The Dukascopy is trading platform for all the traders. Whether you are a pro or novice, you will find this trading platform quite attractive and easy to use. If you consider the hourly candlestick performance of the PepsiCo, it has declined sharply from 174 to hold closer to 167 zone, and after this sharp decline it hasn't really found any significant buying momentum on these lower levels. So that is impacting my assessment, and I feel now the share price performance is back in bearish territory, and we will do well to keep looking for the opportunities to short sell the PepsiCo's stock closer to this 170 mark, as we are likely to see fresh decline and maybe a move towards 160 in coming days, coming sessions. So keeping that possibility in mind, we can gear up for sell on rally approach in the PepsiCo stock, as we have now a fresh swing low in place which is lower than the prior swing low. The only thing is we need a lower swing high, so we will then have a formation of lower lows and lower highs, and we can be fairly confident of the continuation of these bearish stance in the lower time frame like hourly. If we change the time frame to make it medium term, and the candlestick time period will be daily in that environment. So for last couple of weeks, after finding some buying on the lower levels of 155, the daily charting you will see that has been stagnant. It hasn't really found any significant buying closer to the levels of 165, and on the higher side its upside is being capped closer to the 175 mark. So on multiple occasions it has seen sharp decline from those elevated levels. So that makes me wonder whether this consolidation is also likely to give way to a newer decline on the lower side, and eventually we can even expect the PepsiCo stock to cross below 155 in coming weeks, if not days. So keeping that possibility, we can also keep looking for the opportunity to go short, and I feel the price zone of around 170 is crucial, and we can indeed go for a short sell trade provided there is no sharp move on the upside in next couple of days. And if it holds this formation of lower lows and lower highs, we can jump into this trade and wait for the PepsiCo stock to drop toward this prior swing low of 155 and below that. Coming to the longer time horizon, the formation is now seems to be of a change of course for the PepsiCo. For the first half of 2023, the favorable forces were taking the PepsiCo higher and higher, but now it seems to be faltering and it has already made a swing low which is lower than the prior swing lows. So we no longer have the formation of higher highs and higher lows. Instead, we have the formation of lower low, and in due course of time, we will also have a lower high, which we can then exploit for the initiation of a new short sell trade with the possibility of PepsiCo dipping towards 150 or even below that in coming weeks and coming month. From longer term time horizon as well, we have bearish outlook for the PepsiCo given how its fundamentals have shaped up, and also its technical story is also similar. So I would suggest that you keep an eye on the PepsiCo share price performance over next couple of days, and if the opportunity arises, you can indeed go for the new trade and try to profit with a favorable risk reward ratio. That's my outlook, depending on how things have unfolded till the very recent past after the release of its quarterly earning. Overall, the picture looks more favorable for the bears, and we will do well to adopt a similarly to adopt a similar outlook and keep looking for opportunities in the bearish direction. Now it's time for me to wrap up the session and sign off for the day. Before I do that, I would also like to remind that if you have found information useful, and if you have found the channel to be of interest to you, you can like and subscribe to the channel, and we have many other programs which are similarly themed, which offer you glimpse of the trading world and the investing opportunity. I hope you would subscribe and press the icon to become a follower of the channel. Thank you all for joining in. Have a fabulous day ahead. See you next time around.